What is up, my friends? Happy Friday to you. Oh, man. Man. Is there a lot going on? Where am I at here? Is this a high school production here? One-man band. I'm going to go through a bunch of stuff today. I meant to do a video yesterday. I had it all planned out. I meant to do a video the day before. Couldn't get to that one either. There's been so much going on. I actually ended up talking quite a bit about crypto today. Oops, sorry about that. I'm going to actually get my mug out of here. Hold on. Let me get my disclaimer out the way. Derrick Evans, VA Home Loan Specialist, NMLS 155010. Call or text me if you want to buy or refi. That's my email as well. Let's get that going. Let's get me out of here. All right, let's talk about some stuff. So we're going to get to mortgage rates. I'm going to pull up some actual scenarios and show you what rates really look like. It's not a good day to do it, I'll be honest with you. Friday's never a great day to look at mortgage rates or to pull up mortgage rates, especially at the end of the day when the bond market's closed or closing. There's hedges that are built in over the weekend, and some banks allow you to lock over the weekend, believe it or not, in the broker space. But there's hedges in there, and it's not ideal. It's not ideal. Today was not a good day. Please don't shoot the messenger. But it is what it is. And so we're going to just kind of run through a whole bunch of things here. I'm going to talk about mortgage rates out the gate because that is the title here. And yep, that is real. That is not a joke. That is not a meme. That is a for real endless red candle of just falling death. It's bad as it could be. These kind of candles, when you get these, usually it's not good. Usually you end up going lower from there. We've had a few of these recently. This is the most recent one. You saw what happened after that one. And remember, just a quick reminder, we want to see bond prices going up. That helps mortgage rates go down. When we get this downward action in prices, it causes mortgage rates to go higher. And today we lost 42 basis points. So it wasn't good. It actually bounced midday. It bounced off of this support level here, and we had a little candle there. I'm like, oh, okay. Probably the Fed jumping in, pushing the buy button. They're going to save us. No. Whoever it was, God bless you for buying some bonds. I wouldn't buy bonds with your money. But at the end of the day, we closed lower, below support, and we made a new low. So, that's really the problem with what's going on here with this chart formation. As you can see from this particular candle here, which began the downtrend. So we got out of the sideways, really nice little sideways action that we were in, the consolidation period there that was going on for a while. That was totally cool. And then we made a lower low, and then a lower low, and then a lower low, and another lower low. How about another one, and another one, and another one? That was brutal. Then we got a couple days of reprieve. Hey, let's go sideways for a couple days. How about we even go up a little bit? Great. Locked everything that I could. One that I couldn't get locked yesterday that I wanted to. I went ahead and got it locked today. Thankfully I did. Thankfully we got that in because things got much worse afterwards. So it just is what it is. There's no reason to own a bond. Bonds are going to go lower. Mortgage rates are going to go higher. It's one thing I guarantee you this year is that mortgage rates are going to go higher. They just are. There's nothing that's going to stop it. There's no catalyst to help us here. We need an absolute miracle, and this is what's going to go on. So we all just have to get used to that. We have to realize that. We have to hope that it's not too sharp, that it's not too sudden, because that's not good. That's never helpful. But it is going to happen. So be prepared for that. And I really believe even if rates went to 5%, it would have a hard time slowing down this real estate market just because the story is inventory. The story is inventory. And the people who are buying, the people who are actually winning homes in this market are people who are well qualified. They are. It's so hard to win a house in this market if you aren't extremely well qualified because you're probably waiving an appraisal. You're probably putting a big down payment. So those are the people who are less likely to care about what the rate is on their loan. While it may push some people out of looking for houses, if rates went up that much, in this market, most people probably weren't going to get a house. They have to get lucky. And if they didn't get lucky and get a place, there's someone right behind them. So as much as I am concerned and I watching this to see if rates spike too quickly. At the end of the day, I don't think it's going to have a lot of bearing on prices. I think it's just going to disappoint a lot of people. It's going to push a lot of people to maybe exit the market if that were to happen, and to say, you know what, we're just going to have to rent. We can't buy a house at 5%. Now, I'm not saying rates are going to go to 5%. We're not anywhere near there yet. So let's talk about that. Let's take a look. I don't know if I'm supposed to do this or not. This is a forgiveness versus permission situation. So we've got a VA one in here. Let's just go ahead and go there. And we're going to use good credit for these purposes. We're going to use 780. Let's look at purchase rates for VA, and we'll just look at the two thresholds. So we'll just do 600,000. So anything under 647,200, that's considered a conforming balance, VA. And then if it's above that, it's a high balance. And these rates do tend to be different. Now, for me, on here, I'm going to use detached homes for these calculations. There's a bazillion different variations you can do. I'm just going to try to keep it as simple as possible. These are obviously rates with no points and no lender fees, which is what we always promise. 2.75. So there you go. So that's conforming, good credit, 2.75. It's got a little lender credit on there, 1657. Probably can't see that number. It's pretty small. But, 2.75. So again, it's not terrible. It's just not what we're used to. We're used to seeing that in the low twos, right? So now let's go high balance. I can almost guarantee you this is going to be 3%, but let's just do it anyway. So 700,000, that takes us over the threshold, right? For conforming balance into high balance. And let's see how rates look. Same situation, detached home, 780 credit. See what we got. Yeah, my sentiment's exactly JCK. Woof is exactly right. Woof. Wish I had more good news to report. Like, those days were fun, and those days are over. So here we go. Lowest rate on the rate sheet. All these different wholesale banks that we have to choose from. It's nice. Some of them are offering promos. They're still not even up there. All right, 3%. That's where it's at. $14. Lender credit. Starbucks on me. 3%. That's where it's at. So you can see it's starting to get harder. They really need to move. They need to shift the rate sheet a little bit. You can see here, getting lender credits is a little bit difficult when rates go up quickly like this. The rate sheet's not really prepped for that. So like this buyer might want their closing costs credited. Well, at 3.25, we're only getting 7,200. That may not cut it. So what about 3.8? What about 3.5? We need those. The rate sheets are going to be adjusted. They need to be adjusted. They're going to be adjusted. But that's one of the things we kind of don't have a look-see at right now. Now, usually you can go to capital markets after you lock a loan, and you can go, hey, what if we get a 3.5? And you can get it figured out. It's just not on the sheet right now. So 3%, 3% higher balance. That's where it's at. And that could be worse, obviously, if you had lower credit scores. Let's look at conventional now, and then we'll do FHA. And we're just going to kind of do the same scenarios. This time we're going to start at the high balance scenario. And for easy math, let's do 10% down. How about that? A lot of different scenarios you could do here. Let's just do 10% down. We're doing detached, keeping the credit the same. This is just so that we can have a gauge. It's always good to try to keep the scenarios as close as possible. This is actually going to be a conforming balance. We're under 647,200 for the loan amount. So let's see what rates look like here. Okay. 3.5. Little lender credit there. $1,500. 3.5. It's not too shabby, honestly. It's 3.5. I mean, what? These were at 3.125%, 3%, 3.25%. So it's not that far off, right? It's like rates are going up, but it's not cataclysmic. It's just people are seeing in the news that rates are going up. People are reaching out about it. And so this is why I want to kind of arm you with this is what's going on. Now let's do one that's going to be a high balance conventional. This should be interesting. I can hear the other lenders who are on here taking notes. they're either going to go yell at their manager or they're going to go post on Facebook that their rates are better than mine. One of the two. Probably the former. Okay. High balance. Yeah, pretty much 3.625 is what you're looking at there. So 3.625. Let's take a look at the sheet. The lender credit is 21 basis points in this case, so it's going to be like $1,500. This is the kind of stuff we deal with all day. Just all day spinning circles, guys. So you want to be a loan officer. 1548 on lender credit. Not too bad. 3.65 high balance. Okay, so there it is. But you could see how at 3.65, how we're just kind of getting closer and closer to 4. Remember I told you we're going to get in the 4s this year. Like, it's happening. We're going there. We're getting there. It's going to happen. We're headed in that direction. Let's see what it looks like for maybe for the first-time buyer who's doing an FHA loan with a not-so-great credit. So instead of 780 credit, let's look at 640 credit. I always like to look at 640 in FHA and see where that's at. Let's do, we kind of have a high balance already set up here. So let's just do that. Let's do a high balance FHA with 640 and see what that looks like. Just to get a gauge. What about our FHA buyers? What are they looking at? 3%? That could be worse. Okay, you had a lower credit score, you're still getting 3%. That's no lender fees, no points. In fact, to give you $178, you can go buy a nice shirt somewhere. That's about what shirts cost these days. I'm going to go through a bunch of crypto stuff. I'm going to go through a bunch of inflation stuff here in a second, but I wanted to go through mortgage rates in some detail, and I want to try to do this more often. I just feel like there's such a lack of transparency in this business when it comes to this stuff. I really don't understand why, but everyone tries to like hold this stuff to your vest, and the people who are putting their rates out on billboards and stuff like that just have tons of fine print. It's just so lame. Really annoys me. So I feel like there's absolutely no reason for this. And why shouldn't we just go ahead and show people what we've got? Let's get the cards out on the table. What you got? What you playing with? We're going to find out sooner or later. All right. So here's a conforming balance FHA loan, 2.99. So 2.99, 3%, 640 credit FHA. That's not too bad, right? That's still pretty good. I mean, you would, 3 or 4 years ago, you would have said this is an amazing rate. So, rates are still good. So I don't want to be, the guy who's like, oh, rates are so bad, rates are so bad, rates are so bad. That's just the direction they're headed. You don't have to be a rocket scientist to see it. Look at bond prices going lower. That's all. That's what's going on. We're from there to there. They're going down. And you can see the acceleration. Remember we talked about that, the cascading acceleration, where we had like these kind of nice little trend lines, and then it got accelerated a little bit there, and then it got accelerated a little bit there, and then even more so here. Then we leveled off, and then now look at it, boom. So that's Fed. That's all Fed stuff. It's Fed exit happening, rates getting higher, but they're still not so bad. So that's what I wanted to kind of go through with you right there. A couple things we're going to look at today in the markets, just some FYIs. For today, and just like most days in the stock market, starts out low, gets bought up throughout the day. That's just kind of the flow that has been taking place. It won't stay down. It just keeps coming up and up and up like it's a beach ball in a swimming pool someone's trying to drown. And, that is kind of what we've seen really since 2009, honestly. There haven't been very many days. We've had a couple flash crashes here and there, but for the most part, the buy button's getting pushed. Today, for the most part, all three markets, major markets, indices, were all down, and crypto was all green. And that also happened a couple days ago, and that was one of the things that I told you in my second 2 or 3 videos ago, that I believe you're going to see stocks sell off, and you're going to see money move from stocks into crypto. And so every day that we're red in stocks and crypto's green, we're seeing that it's going to be very slow, but you're seeing a lot of that stuff go on. In fact, you're seeing things like this right now. Mark Cuban, 80% of his investments that aren't on Shark Tank are crypto related. You're going to see tons and tons of stuff like this going on. And I'm going to get into some more of that in a second, but billionaire investors putting massive chunks into crypto. What did Fidelity say? You guys got to see this. So this is from Fidelity. Fidelity's report on Bitcoin and also just crypto in general. But this is particularly regarding Bitcoin. This is from the statement they released when they did their analysis of it. We also think there's a very high stakes game theory at play here, whereby if Bitcoin adoption increases, the countries that secure some Bitcoin today will be better off competitively than their peers. Therefore, even if other countries do not believe in the investment thesis or adoption of Bitcoin itself, they will be forced to acquire some as a form of insurance. In other words, a small cost can be paid today as a hedge compared to a potentially much larger cost years in the future. We therefore wouldn't be surprised to see other sovereign nation states acquire Bitcoin in 2022 and perhaps even see a central bank make an acquisition. This is Fidelity, team. So I know I have like my crypto homies on here who watch this stuff. Some people just turn it off when I talk about this. Totally fine. But this is so insane. This is what we're talking about. When we say Bitcoin will hit $1 million, that's what we're talking about. Imagine countries fighting over it. There's only 21 million Bitcoin. There isn't enough Bitcoin for every millionaire in the world to have just one. There's not enough Bitcoin for every millionaire to have just one. That excludes nation states. That excludes huge billionaires who buy tons of it. That excludes companies like MicroStrategy who have hundreds of thousands of Bitcoin. I mean, that excludes all the Bitcoin that have been lost forever and that are gone. This is going to be a huge year for Bitcoin. That's my expectation, although it doesn't really matter. All Bitcoin needs is time. It is the ideal monetary policy wrapped into electronic blockchain that cannot be tampered with in any way. And people are starting to realize that El Salvador has set the stage. Can you believe that El Salvador, of all countries, has set the stage for this? And the game theory begins. So you're going to see more on that. Also, big news yesterday, Supreme Court blocked the COVID vaccine mandate for businesses. I told you this would happen. I told you it was unconstitutional. Anyone who knows anything about the Constitution knows it was unconstitutional. Complete trying to lawyer, loophole, bunch of stuff, ridiculous. Got defeated pretty easily in the Supreme Court. Knocked down. They did say certain healthcare workers who work for the federally run hospitals would be subject to it because of the way that works and the way the law works with that, but not private companies. So thankfully that is behind us, and we can hopefully get to some normalcy here soon. A lot of stuff happening with Omicron. A lot of people testing positive. A lot of people just getting sick. I think a lot of people have the flu. I know my son had a little stomach thing. I think people are just getting sick. It's that time of year. Be careful out there. Be smart, about what you're doing. Netflix, I included this one there. I want you to check this one out because Netflix is raising their prices, so everyone should know. Netflix is going to $20 a month. Look, Netflix is worth $100 a month. Remember the old TV we used to pay $150 for? Netflix is so much better than that. Their original series are incredible productions, and I think it's really, really worth it as a consumer. That said, I wouldn't buy the stock. This stock is going to be transitioning from a growth stock into a value stock, right? Because you can only grow exponentially for so long with users before you get to a final adoption stage where you're on the other side of the bell curve, and that's just or you're at the top. Even if you're at the top and you're not on the other side, you're going to get there at some point. Wall Street was counting on Netflix to increase prices as consumer growth wanes. So the transition from growth to value can be brutal. So I'm not interested in it at this point. If we get to a point where, it trades down below a 20 PE or something like that, then it becomes a value stock. I'm interested in recurring revenue models like that. Mark Cuban, we already talked about that one. Gemini, I wanted to bring this up because I did a video about Gemini Earn and how you can take your cash instead of having it in a savings account where it's earning you nothing, and you can put it in Gemini Earn and you can make 8% on your cash. And so with the Gemini US dollar, which is a stable coin on the Gemini exchange. I also talked about the Gemini exchange being owned by the Winklevoss twins and how they're pushing to really be the first big crypto bank. Well, crypto exchange Gemini pushes into wealth management with acquisition of BitRIA. And they basically, the cost for the acquisition was not disclosed, but needless to say, these guys have plenty of money. The business model is amazing. It's dramatically better than traditional banking, and it has been a a really, really good investment for all of the years it has been around. There's only a few years, but Gemini Earn and the Gemini US dollar, GUSD, has been a great investment. And the APY that it pays out, which is now 8.05%, has only gone up over time. It's never gone down. So I was able to recently confirm that. So you can read about this one, you check it out, but just thought it was interesting. They're doing everything, all the things that make good money are the things that they're doing, and they're staying away from the traditional banking stuff that is just a time suck, like debit cards. Like, I don't think you're going to see these crypto exchanges do debit cards. Maybe they will. Maybe they'll figure out a more efficient model, but there's just, it's just not one of those things that I think you'll see them getting into. They're going to stay away from stuff that's high intensity customer service and stick with stuff that's more hold. That's why they give you 8% to park your money with them. You park your money for 8%, you're leaving it. You're not going to move it around a whole lot. You're not going to find a whole lot of better places to put it. All right. This is I want you to watch this video. This guy is really interesting. He says crypto markets are like the internet 30 years ago, still in the very early innings. I agree with that. Still, most people have no idea what's going on. And I'm trying to learn every day. I'm trying to take in content every day and grow my knowledge on some subject in the digital asset space every single day. And I am still light years behind how fast it's moving. The inflation rate rises 7%. Remember, the 7% number is what they're telling us. Okay. There's no way that's what it is. It's got to be more than that. But you can read up on this. You can check it out. You can Google a few different things. Actually, probably censored on Google. DuckDuckGo it, where they talk about how they've changed the way they're calculating this. Listen, inflation is much higher than this. That's why the Fed is taking such aggressive action. They need to do it. This one here was one that just sort of justifies what I was telling you 2 or 3 videos ago about how inflation can actually be a smokescreen for growth. And so, like here, online sales hitting a record over the holidays. Well, was it really a record though? Or does, if you adjust for inflation, is it still a record? And that's the thing. So they can make a lot of these companies look like they're making more money, or they can make quarters look really good, but really it's inflation that's a bigger cause than actual execution by the company, which can propagate, unfortunately, moves in stocks to go higher that are unjustified. So that's one of the reasons I use caution right now in stocks. Caution in stocks right now. I really hope this happens. It has become very public, the amount of money that a lot of the people in Congress are making trading stocks, because they are allowed to legally. They can trade stocks based on insider information, and they are doing it, and they are making lots of money. Nancy Pelosi has been she's been the person that everyone points to on this because her investment returns are so insane. She's the best investor in the history of investing, in case you didn't know that. Her ROI is way, way, way better than Warren Buffett or anyone else who's ever invested. So this has come to light, and you have people like Blake Masters, who is running for Senate in Arizona, who I actually got to meet and is a really, really cool dude. He is talking about this as being one of the main things he wants to attack, and there's more and more people who are getting behind it, because us, the people, we think this is bullshit. We don't think this is right. None of us, it's like, oh yeah, the Congress, yeah, they should be able to do insider trading, although we would get thrown in jail for that. No. What's the double standard? We got to get rid of it. It needs to go away. So that's good to see. This one, fear of even higher mortgage rates may be heating up winter home buying. Remember what I was telling you, that when rates start to go up, there will be a push. Initially, there's going to be a surge as people go, oh, I got to get it now before rates go higher. We are right now in that spot. We are right now in the spot where I can tell you, if I could bet on this, maybe there's a way I can. Maybe I need to figure that out. If I could bet on whether mortgage rates would be higher 6 months from now than they are today, I would. And I would bet a significant amount of money on it, and I would win. So if you know, or you feel very confident that rates are going to go up, you want to get in a rate locked in sooner rather than later is the only answer for that. And, that's what you're seeing. And it's not just happening here in San Diego, it's happening everywhere. This was really interesting as well. We've seen a lot of different things come out from Goldman Sachs. We've seen other CEOs come out. Morgan Stanley's buying Bitcoin through GBTC. And they're saying in here that Bitcoin could rise to 75,000 this year to top record high. This is a bank CEO who's predicting this. So now, does a bank's price prediction mean anything? No. But what's significant about this is look at what banks have done and said about Bitcoin for years. Look at the about face. They just absolutely spit on it for years and years. And now they're saying, I think it might catch a double from here. So, I mean, it's just, it's interesting. I don't have a way to share this with you. This is the Fidelity statement though. And that's going to just kind of wrap it up for today. I mean, the markets were moving pretty slowly the last couple of days. You know, this action in the bonds today was just really disappointing. You know, I was really hoping that we'd finish the week with at least some sort of glimmer going into next week. But as you can see, just a really ugly candle to end the week. And I imagine that Monday is not going to be any better, but I hope I'm wrong. You know, I hope maybe we can set a new floor here. We need this to round off. We need to round this off and start heading higher. Even if we're just going up to retest something and then for the continuation lower, give us a good lock day or two. Come on. Give us something here. That's all we can really hope for right now, because we are not going to be sitting here hoping that rates are going to get better. We just need to find good lock days inside of this knife fall. I mean, this isn't even a falling knife. This is a falling bowling ball. And people in the mortgage industry, if you're not studied up on that, you better get studied up on it quick. So pretty flat stuff, though. You know, Bitcoin's at 43, Ethereum 3,300, XRP still delisted pretty much everywhere at 78 cents. Litecoin today, I took notice, was up 6%. Something's going on there. I'm not sure what. I'm not too plugged in. Oil up to $85 again. Here we go. You know, and that oil is telling us a different story than kind of what you're hearing out there. Gold at 1,800, oil in the 80s. That stuff looks pretty good. You know, I mean, we haven't really seen gold. So gold was up in 2021, 8%. Of course, there's a lot of risk in owning gold. It could go down. It could go down a lot. That's why I'm like, Gemini Earn, 8% guaranteed. But we've seen record inflation and gold's not moving. So I'm worried about my buddies, especially here on YouTube, who are always telling me about gold and silver, gold, silver, gold, silver. Why haven't they pumped? Doesn't make sense. We're getting horrible inflation reports, and it's not even like they pumped in front of it. They just are flat. I don't get it. But the hard thing about gold and silver is that you have a fluctuating supply. You know, sometimes the supply increases, sometimes the supply decreases. That can affect things, but it's unpredictable. That's the nice thing about Bitcoin. It's very, very predictable. Look at the 10-year, 1.8%. Wow. Remember when that was at like 0.5%? That was not that long ago. Here's some bonds. You see some bonds from another country. I believe this is the German bond right here. Negative. Hey, give me your money and we'll give you less back later. This is for people, I guess, who don't trust putting it under their mattress. I don't know. Who would buy a bond with a negative yield? Crazy. But it's there. France, you know, very low rates there too. UK, very low rates, but not, you know, lower than ours. Japan, very low rates there on their 10-year. The US is by far the strongest of them all. So, yeah, there's a few different arguments. Anyway, all right. I got to get back to work. Y'all have an amazing day. Have an awesome weekend. I got more coming for you next week. I have a bunch of videos lined up to make. Just going to continue to drop as much knowledge as I have. We'll run more rate scenarios as well. If you have one you want me to run, let me know. All I need to know is you know, purchase price, how much you want to put down, credit score, and really just if it's a single family or condo, because that can affect things. I need those 4 pieces of information. That's it. And I can run a rate scenario for you, let you know how things look. Happy to do that. I want to get more transparent this year. I want this to be a place where people can see behind the curtain what the heck is going on and try to use that information to make smart decisions. So have a great weekend, guys. Share this, and I will see y'all soon.